Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics. Well noticed post covering finance and property news. Post-election, Edwin is back for another rant. Edwin, hello. How are you doing?
I'm doing well, Martin, because people should have got in early last year when I was Dusty and I we were making an offers on Albo and Co real estate agencies franchises. Now the price has gone up.
Yeah, very interesting. Well, there was this little a meme from some time ago, right, about two cheeks of the same bum. I have to say, we've got one cheek a lot bigger than the other now.
Well, that's right. And but look, to be clear though, as we've been saying all along, they're both the same. Both were not and are not interested in home prices dropping. I mean that was a given from both the Minister of Housing and the Shadow Minister of Housing. Both would not, and they won't dial back immigration, as you and I know. And both parties have very wealthy landlords with numerous investment portfolios or properties under their belts in their ranks. So damned if you do, damned if you. It was always going to be choose your poison. Do you want tenants or do you want landlords? And we chose tenants.
Yeah, absolutely. Well, I did a show yesterday called "A Bigger, More Taxed, Less Housed Australia Incoming?" question mark. Well, maybe it was a statement, but I showed it as a question mark, and it's got a huge run actually on my channel because I think a lot of people were reacting to that. Okay, let's face it, the results are actually pretty amazing. And if you look at it carefully, you can see there that there's still some uncertainty about exactly how the numbers are shaking down, but it's a landslide for the Australian Labor Party, or should we say the Australian Property Party. The alternative Australian Property Party, the Liberal Nationals, are rather shrinking, as this next chart shows. A new battleground, lots of results. But here's the real killer, right? Fascinatingly, if you look at Metro Sydney, you can just see how emphatic the rejection of the Liberal story has been in and around Sydney. It's a sea of red. And it is fascinating to see that the movements are. But I want to make a point here, Edwin. A lot of this is to do with the flow of preferences. So the Greens are in difficulty predominantly because of the weakness of the Liberal vote, which sort of shifted preferences. So, there's a lot of moving parts below the top line story here. And I've believed for some time that this was a vote more against something rather than for something, right? It was against some of the shenanigans that the Liberals were talking. And look, let's face it, that campaign was pretty messy. And the fact of the matter is that a lot of people didn't believe a lot of what they were saying. But it is a vote for higher home prices. And, the way to numbers are there are more people with property than not, more people voting for higher home prices. It's pretty simple.
Yeah, and again, we go back to it wasn't going to be any different between the two, and we always said to our followers and viewers that are always ahead of the curve, and that is watch the Monday evening property rents because you're going to be ahead of the game. You're going to be ahead of the game when there's shifts and changes, and the main proponents of the shifts and the changes are the groups that we often talk about, which is your which are chatterers, your silent tigers, the desperate housewives. They're making a huge. They're still hot to trot in the North Shore, the Upper North Shore area, because you look at the areas, you look not only at the demographics, but you also look at the age groups in terms of who's been waiting on the sidelines, as you and I have been saying, who's been waiting on the sidelines, who's got money in Bitcoin, who's got money in shares, and now they're making the transition. Given the fact that construction is down to a percentage of what it was many years back. We're not really focused on new construction in terms of freestanding homes, in terms of homes that people want to live in, and in the areas, more importantly, the areas that people want to live in, want to retire into. So there's this upward pressure from retirees, downsizers, empty nesters to stay in the locality. So they absorb a lot of the smaller homes, and the bigger homes get taken up by those that got money, because banks aren't, when you're trying to get into areas. I mean, you talk about Seven Hills. There was a sale in Seven Hills a couple of weeks ago. There, a property went in Seven Hills for $2 million. I mean, that Seven Hills, in the part of Seven Hills where it borders onto Layla Park, otherwise known as Trailer Park, in years gone by. So you've got these shifts and these moves and these changes where a lot of suburbs are becoming, $2 million entry levels, and then you've got areas where they're still hot to trot at your 2.5, 3 million. Why? Because of the money that's coming in from other asset classes. And that's what I call your desperate housewife effect. Those that have been sitting on the sideline, they've made money out of stocks, out of gold, out of Bitcoin predominantly. But look, at the end of the day, our followers, our viewers have always been ahead of the game, understanding, and yeah, we talk about the dark side of property, what's happening, what's not happening, what the government isn't doing, might be doing. But hey, it's better to be ahead of the curve than be behind the eight ball when you're wanting to get a long-term rental property, when you want to get an investment property, or predominantly a principal place of residence. But look, it's interesting, the rhetoric, the commentary, the global commentators, including our old mate Trump, is basically saying who the hell, who the F, in the nutshell, who the F is the other guy, who was running against Albo, what was going on. You've got leadership within the party itself now, putting out commentary about how it was cankered from the inside. Uh, and at the end of the day, I mean, Dudley himself, he didn't look like he wanted to win. He really didn't look like, and he didn't differentiate himself. But then, what was it, a mandate? Was he mandated? And as I put that meme up, where Turnbull says to Albo, says, Australians still believe there are two major parties. And then Albo, answers back and says, yeah, I know. And many else are convinced that we want property prices to be affordable. Glad Peter, was a good sport and listened to you. So that's a crux of what went on. But moving forward now, it's about rolling your sleeves up, head down, tail up, and make it happen for yourself, because nobody else is going to look after you.
Yeah, and you made a little commentary here. Australia's chose more renters over more landlords, and I want to highlight again that there are more people with property holdings than without, either mortgaged or not, and therefore they will always go for the big numbers. And the big numbers, of course, also, as you say in this slide, also include not only those who live in Australia, but those who aspire to live in Australia. And I thought it was quite interesting that Modi was one of the first leaders via Twitter to actually congratulate Albo on his result. Now remember that they've done a few quite big deals, and one of them was to allow the floodgates to allow more people to come into Australia. We are in for a bigger Australia, because it's clear that the growth of Australia and population is pretty much the only lever. I would also make the point that through the election campaign, there was zero discussion about productivity improvement, zero. And Chalmers actually, when he was interviewed post the election yesterday morning, said that the first term was a battle about inflation. The second is going to be predominantly productivity with a bit of inflation. But what are the policies about productivity? I don't see them. There was nothing in the election campaign.
No, the policies with regard to productivity, Martin, is we're going to be manufacturing leases. residential tenancy leases. That's what we're going to be manufacturing and producing because there's not really nothing else. But we spoke about this remember when old mate Dom, the Dom Perrottet, when he went over to India. Well, I flagged it then. You and I flagged it then, and we discussed it on the show. And we say, hey, the floodgates of the money from the WeChat charters over in mainland China was shutting down, was closing, and now it's pretty much locked up. And we needed to look for another avenue, and the other avenue was going to be the silent tigers, and it was going to be from India. And as much as people wanted to blame Labor, the libs were already there. So. And we flagged this, it was over 18 months ago that we started talking about it. And hence the reason why at the beginning of the year, my first prediction for 2025 was 2025 was going to be apart from what's happening now, from what we knew from before. I always said that 2025 was going to be when the silent tigers, when they roared, and it's their year. So from that, the predictions are basically are made on getting bits from here and there and putting it all together and looking at how the immigration policies are going to be running, where is the money flow? Where is the money flow? And we saw a huge increase of incomes, triple, quadrupled over in India because of the lockdowns and all the work that went over there. And then the building industry just went crazy. And the speculating in off the plan apartments just absolutely, ripped it through. It made the Australian property gamble from 2014 made it look like Sesame Street in terms of what they did there and what they continue to do and what they're still doing. But look, this is where people have got to wake up and they've got to start taking heed and they've got to start really understanding what's around the corner with the relationship that we have with India and the money that's coming in. Number one, it's easier to bring money from India into Australia, right? So the Modi hasn't stopped people from taking money out of India to take it anywhere across the world. People may think that Canada is a good option. They're not really that interested in Canada as much as they are in Sydney. And anybody and everybody that discusses the property prices in New Zealand and thinks that the Indian population is going to go to New Zealand, well, that could whistle Dixie. Indians want to milk sheep just as much as they want to get involved in the building and construction industry. They're not really interested. Australia and Sydney, more to the point, as well as Brisbane areas, Queensland. They're more front of mind in terms of principal places of residence and also investment properties. The other fact is that a lot of the local Australian Indian community invested heavily in off the plan purchases in speculative property purchases over in India, and they made a mozza. And that money is going to hit Australia. It's already hitting Australia, and we are already seeing from our client base, from the silent tigers that we speak with, from the real estate agents that we speak with, they're running in those circles, and you can see the shifts and the changes in the movement of money into the property arena. And guess what, Martin? And it's not apartments like the WeChat chatters did back from 2013 onwards. It's all freestanding homes. Hence the reason why you've got a lot of the Blacktown regions going up in value, and also from your parts of the southwest region as well. So now, from the local point of view, when they're upsizing into your Kellyvilles, Castle Hills, and all that region. And now there's a huge outflow where I say jokingly, but it's what we see and what we're told. We see with our own eyes where the silent tigers go toe to toe across that no man's belt, or the new where they've drawn the line, which is your North Rocks, and this is where old mate Parapower wants to buy into, and he's been priced out as well, and he continues to be priced out because prices are just screaming there because of the competition. And why? Because of schools, because of educational facilities, because of transport, because of infrastructure, shopping centres, and the communities that are gravitating towards those areas cater for these communities. And education is very, very important. And you got a lot of great schools across that belt. So these are the shifts and changes, and that's what the WeChat chatterers are saying. They're laser focused on more freestanding homes. They're laser focused on that because of they know that under this government, the immigration is not going to be dialed back, and they're going to be looking for homes that they can convert very easily into affordable accommodation. They know that there's going to be higher costs in construction, and so do the silent tigers as well. They know there's going to be higher costs in construction. Therefore, when you take all these things away, construction, supply, even affordability to renovate. You take all these things away. You cripple these areas, which is less property on the market for both rental and for both ownership. And you keep on piling in the numbers from abroad under different visa names and visa numbers. Well, yeah, it doesn't take a rocket scientist to figure out that demand is always going to outstrip supply. Again, we talk from the point of view on most of the East Coast, not Melbourne, because Melbourne's another kettle of fish altogether. And we also talk about more from the point of view of freestanding homes and older style apartments, as opposed to new developments, even in your hot market of Sydney. So these are this is what the chatter amongst the chatterers is very strong, and also against the silent tigers.
Yeah, and it's worth, I think, just putting a couple of data points on the table. The first one is this one. It is worth just looking at the long-term trend in terms of property prices relative to household incomes, and you can see there that they have gone way apart. And of course, we had the asset boom of the 80s. We had the capital gains tax discount introduced in the 90s, and the deregulation of the financial system. And you can see that property prices relative to gross disposable income is now, broken away. So a lot of people in Australia are really struggling. The typical is 6, 7, 8, 9 times. And this data point here just showed that, in Sydney, the affordability is pretty awful. They'd have to allocate 57.9% of average income to service their mortgage. That's the highest in the country. But Adelaide is second with 47.4% of income. Brisbane follows at 44.8%, Hobart at 40.5%, Perth at 37%. Melbourne, wait for it, Melbourne is the most affordable city for homeowners. They only need 36.6% of their income to pay their mortgage. So there's an interesting departure there. And I think that's a really important sort of starting point to understand that there is a real problem. And, this problem is long-standing, getting worse. By the way, it's also worth noting that credit is still growing much faster. So this is the latest credit data. Housing credit rose by 0.5% over the last month, up from 0.4% in the first 2 months of the year. And what that means is it's growing at 6% plus, which is much higher, of course, than incomes or indeed inflation. So more credit, more credit, more credit. And it's just interesting to note, this is from Westpac, that the average minimum mortgage repayment did move back just a little based on their data, because, of course, interest rates did move back slightly, but it's still way higher than it was in 21, 22 or 23. You can see there the impact of that. So we have a significant set of pressures. And guess what? There are now strategies being spoken about to try and solve the problem, right? And as you shared with me, we're excited to announce a new 10-year interest-only loan offer with no midterm reassessment, providing customers with more choice, long-term financial flexibility, and greater control over cash flow. So AMP is offering the 10-year mortgage interest only. Interest only. Remember, interest only means that you don't pay other than covering the interest. So the bank's fine, but what about paying the capital later? Because, of course, the chances are that you're still going to be sitting on a really large mortgage. So, we're starting to see, we're going to see some more of this, I'm sure, as time goes on, because of this gap between income and affordability just continues. And, of course, Albo's announced the 5% deposit for first home buyers. with, of course, the risks very much flowing back to well, the government basically. If prices don't go up, if defaults go up, guess who picks up the tab now? And of course, as this particular article from John Kehoe the other day showed, there are some risks involved in some of the Labour as well as Liberal strategies that were being proposed, which is a little concerning insofar that we know there are significant pressures. Now, okay, it's true to say that we do expect the rates to be cut a little bit. Inflation sort of opened the door, but I'm not as convinced as some that we're going to see massive rate cuts because inflation is still bubbling along. And in fact, some of the latest data suggests that maybe inflation is a little bit more aggressive. This is the Melbourne Institute data, which shows that the inflation gauge has started to tick up again. Now, if that's true, then you're not going to find a great chance to cut rates. So the old interest-only loan could be the future. And this article suggests that mortgages with 10-year interest rates, which have been available, by the way, for investment properties for a long time, could well come to owner-occupiers. So the answer is more credit, more lending, more leverage. And, how's that all going to play out? Well, I think this sums it up quite well. Right, we're running off the edge of a cliff. Right, I don't see how this is going to play out well for a lot of people who are going to be more leveraged and paying more of their income to try and get somewhere to live. But that's what we've chosen because that's what the election results suggest.
Yeah, the thing is, Martin. Again, I'll bring up the point that if there was a total dial back, if there was a pause on the current immigration policies, I could understand that we were really we really know where we're standing. We really know how many are basically swimming naked in the in the sea at the beach, and that would be catastrophic. But that's the reason why the Libs and all the labs have got any interest in dialing back immigration. Now, it's going to be interesting from our point of view, and Dusty and her associates are going to look very closely at the immigration pathways, the visa pathways, and because I have a sneaking suspicion, and highlight this. I've got a sneaking suspicion that Dutton's dream is going to materialize. Is going to come true through. It's going to be channeled through Albo, and that is to bring in the high net worth individuals. In other words, that the golden visas, the golden visa pathway that similar to Trump. Then you've got to look at the small business. Small business is absolutely getting decimated and has been getting decimated for the last 3 years, and for various reasons, political and global economic factors, and more to the point, based on for tonight's rant, is all about construction as well. Absolutely hammered, where we know that 57% of building companies, big tier companies and small companies are basically trading insolvent. So that is the scary thing as to how much it's going to cost moving forward. Hence the reason why you've got to bring in money from overseas. We know that the doors are pretty much shut, as much as you can see Chalmers and Albo sort of trying to open the door from China from this side, but Xi Jinping's holding on to it on the other side, not allowing that door to open because they're in a world of caca. So the alternative is India and Vietnam. Once they find the balance, and it's really going to be wait and see. So on that point, the emphasis on that point, Martin, is that again we've got to take stock of our market, of our property market. It's a drop in the ocean in compared to a lot of countries around the world.
Yeah, good point.
And
And
that's a simple
just one
fact.
thing, on that, and you mentioned construction costs. Did you see this? Stockland basically said that their new home prices are going up 70% compared with last year, and they attributed that to, guess what, the cost of labour and the costs of materials, etc., etc. And Stockland has painted a cautious picture of the recovery in its first home buyer dominated greenfield housing markets. And I think that's a really important point, because you mentioned the failure of construction. A lot of construction players, some small ones, some larger ones, are still failing. The numbers are going up quite dramatically. The latest data from the regulator showed that. New home prices, if they are going up 17% because of all the input costs going up, well, that's going to actually put more pressure, of course, then on the price of new property. And that flows across then to the rest of the market too. So you've got all these demand drivers and the supply drivers all saying higher, higher, higher. Now, of course, Albo's talking about building a lot more property. But if they're going to build more property, which is 17% higher, as Stockland is saying, what's it going to do to the market? It's not going to solve the problem.
No, but this is the problem, Martin. In order to jump to the actual building process, right? In order to jump from the planning stage to the building, you've just increased the cost. And in order to get there, from what we've known over the last 3 years, is look, this is breaking news. It just hit me, Martin. I just got a ray of light came down from heaven, and it just hit me. So this is, share it broadly and wide. I really truly believe, truly believe that the Labor government is going to build, twice as many homes as what they built over the last 3 years. How's that?
Well, according to some, they built zero, right, through the housing.
Oh, hey, I'm just talking. I'm just talking that 100% increase. I'm talking percentages. Now, let's not get into the facts of numbers. Let's talk.
Okay, so 100% of zero is zero. Yeah. Look, the fact is they are again doubling down on build more homes, and maybe that's not surprising given all of the election campaigning and everything else. And I noticed that the Housing Industry Association put out a release the other day saying, well, of all the things you'd be thinking about, housing is the first priority from day one. Any delay or political grandstanding will only deepen the nation's housing crisis, said the HI Managing Director, Jocelyn Martin, right? HI would like to congratulate the Prime Minister. We additionally would like to thank Peter Dutton, blah, 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 blah. Access to a home, whether to rent or own, is becoming unattainable for too many Australians. This is a challenge that demands a major response in the first days and weeks of the new term of government. Okay, and just to remind everybody again, cost blowout, shell shock, hundreds of unfinished homes have been put up for sale by desperate owners because they've been unable to complete them. Why? Because their construction has fallen apart, the builder's gone bankrupt, or material costs have risen significantly, etc., etc. So I don't know. How can you square those two circles, right? The aspiration to build more, HIA and the government, and the reality of it's impossible because more and more construction is falling over. I can't see how this circle can be squared.
Containers. They're called containers, Martin. They're
Right.
I'm not joking. I'm serious. Like
Yeah.
it's one of those things that the cost of land continues to go up, and cost of construction continues to go up. And in that post of buying the land, then you've got to obviously get, from a developer's point of view, you've got to get all your civils in place, and that's a fortune. That if they're buying the land, let's say a raw site at 350, then and it was a 600 square meter block, then they've got to cover down to a 300 square meter block, and because they've got to then add, 175, $200,000 in civil works, curb and guttering, and the rest in order to make the subdivision fly. So there's all these added costs, add-ons and add-ons and add-ons, council contributions and blah blah blah. So it's really out of reach. So my take is that if if you've got a block of land, go around where you start to see the fences, the boundary fence has been put up when you know that a house is going to be demolished, and tell the get a hold of the builder and ask him if you could take that house away, because that's going to be worth a bit of money. It's costing the developer, it's costing the builder, $35,000-$40,000 to demolish it and cut the rubbish away. But hey, you're going to have a little bit of asbestos, but hey, it's better. You can a bit of, and then you just put it together on your block of land, because so all these added costs. Where do you go? Where do you go? But more importantly, we've known that the extremities of the regions of the main cities, because of Melbourne, they don't work. The subdivisions don't work. We get away with it in Sydney because of the nature of Sydney and the central hubs, the commercial hubs, and also the demographics, the polarizing of certain ethnic groups to certain areas. We've gotten away with a sprawling out, but in Melbourne it hasn't. It hasn't really worked, and hence the reason why a lot of people don't want to buy the first home out there, because they've got more issues with infrastructure out in the fringes of the Melbourne region than what we have. So, and really, realistically, we've got to move into that small to medium density developments in the established areas. But then you've got a lot of obstacles. You've got a lot of hurdles that developers and builders have got to jump through. So it's unfortunately, it's going to be choose wisely where you buy and what you buy, and if you're thinking of buying or moving, do the quicker move, because things from our point of view, from what we're seeing, things may have slowed down with auctions, things may have slowed down with sales, but the nature of the season, the nature of what's been going on, the holidays, the elections, things are going to slow down, and it's going to be interesting to see moving forward how things start to unravel. But from a longer perspective, people have got. There is a window. There's a window to take advantage of certain areas in that emotional sentiment, because a lot of people sell homes on emotion and a lot of people buy homes on emotion, and agents bank on that emotion in order to get listings and in order to get sales across the line. It's a very choppy market. There's a lot of uncertainty, and where there's uncertainty, there's also good opportunity. And I think for those that are thinking of getting in, there's going to be a window, because once the dust settles and people start realizing, hey, construction's not going up in terms of the building numbers aren't going up, but the immigration policies aren't being dialed back, and things are getting harder and more expensive to build. Those things people are going to stay put in their homes, and again, I go back to that point, Martin, is we're not a very big market in comparison.
No, absolutely. Well, I don't know whether you saw this, but the ABC put out a program the other day, and it was actually done by a young, I think, YouTuber producer who was actually they harnessed to do it. But his thesis was, you got to build up. You got to build up because you've got no choice. You haven't got enough land, et cetera, et cetera. And he showed Hong Kong, and he showed Singapore as analogues to Australia. And I'm thinking, hang on a moment, how big are those land masses? How big are we? First point, it's completely different. You cannot draw an analog between Singapore and Hong Kong and Australia, right? The second is he downplayed the poor quality of construction. He sort of in passing said, well, we had a few issues, but we know that more than half of high rise that's been built have got defects. All of the data shows that. And the more I look at it, the more serious those defects are, the more concerning the future strata levies are. And therefore, building up is creating a huge financial pressure on prospective purchasers. And then the third point is, and it's actually interesting that the WeChat chatters have been talking about, not all property is desirable property, right? And actually, a lot of the high-rise stuff, forget it.
Oh, look, and this is it. This is what I thought it was interesting, and we brought that up because came across this. Dusty came across this post on WeChat, and it was rather interesting. And they're saying it's the heading goes along the lines more or less: cherish your life, stay away from Sydney apartments. And at the bottom of that, in that last paragraph. That last paragraph there, I mean, it's a classic, Martin, absolute classic. That last paragraph reads, say no more. All tears. In other words, in brackets, burn so many times. That's why it's all tears. I hereby appeal loudly to everybody. Cherish your life. Stay away from Australian apartments. So this is what's doing the grounds in the mainstream WeChat circles, and also in the investment forums that they have abroad, local. And this is what I say. These are the groups of people that are moving and are making shifts sideways, upwards, downwards, left, right, center, whatever, whichever way you want. When they get together and they move as a mass, because a group to deal with. I mean, look, there's certain as I've been look, it's been happening in Sydney for for decades. You saw the Italian communities, the Greek communities. Then in certain parts, like your Marrickvilles, the Greek communities got pushed out. Because in the commercial sectors, because of the Korean communities moved in, and from the Korean communities you moved. Now it's Marrickville is now turned into another Vietnamese hub, but it's more of a trendier hub. Less authentic than your Cabramatta and your in your Canley Heights, but it's still it's turning into. So these are the shifts and the changes, and the people that gravitate towards these areas. So these are groups that communities that actually make huge impacts into land values, whether it's up or down or sideways, as I said, and also make huge changes and impact on LGAs and suburbs, because they also have a big impact on the educational centres, on the primary schools, high schools, and you see the changes over the years. So I've been on this on this planet long enough to see a lot of changes in many parts of Sydney, and over the decades, and it's a fascinating topic. But to base the changes and the shifts of the markets and construction, and what we can build, what we can't build, and compare it to Hong Kong and Singapore and the land masses there, and the restrictions, or the way that they build, and what they can get away with, and the sheer mass and volume of people. Comparing it to Sydney, I mean, you got rocks in your head. Like I said, that's just as foolish as comparing our market to the New Zealand market or Canada. You can
Yeah,
make certain points of reference, but But at the end of the day, they're all different markets.
Mm. No, they are absolutely, and I use New Zealand as an interesting analog, and New Zealand prices are still falling, interestingly, and supply is rising. And despite interest rate cuts, people are still a bit more reticent. Of course, migration has been dialed down in New Zealand, so you've got to look at all those broader factors. But I just wanted to cycle back round because you mentioned something quite important, and that is the education needs. And I've had a couple of interesting one-to-one conversations over the last week. Both conversations were with people moving from the Indian subcontinent, coming to Australia with a family, and their prime focus was dialing in on specific catchment areas for specific schools. They were looking for not apartments, they were looking for houses, standalone houses, but it had to be within these catchment areas. And it really brought home to me the strong link between the catchment areas and particularly those from the Indian subcontinent who seem particularly fixated on it. And I went back to your prediction. You mentioned it earlier on, but just to be clear, you were talking at the beginning of 2025, whiskey glass in hand, right? The silent tiger is going to roar in 2025. Well, I can tell you, Edwin, they are absolutely roaring. And so, as you say, there's no way is this going to be dialed down. This silent tiger revolution, I think, is really much more significant than many people are actually giving credit for at the moment. And I do think it's going to have a direct impact on suburbs connected to the education system.
100%. And that's what the WeChat chatterers did. That's what the look, we even go back before the WeChat chatterers. We go back to the Italian communities. We go back to the Greek communities. Look, at the end of the day, uh, if you went to, for example, your suburbs, uh, white Anglo-Saxon suburbs, or where all the skips went to. I mean, it was for an ethnic, it was sort of you dial down in education. That was the historical belief. It wasn't all, it was like that. It was just beliefs. These are beliefs. But now we've gone from beliefs into a lot of education, like into educational realities. You look at your adoption in the Western society of your trends with regards to wokeism, whatever you want to call it, modern lifestyle acceptance, whatever you want to call it. Each to their own. If you identify as a parrot, be a parrot. If you identify as a cat, be a cat. Whatever you want to do. But when it's then filtered through the educational curriculum, and the focus is on that as opposed to competitive areas such as the Indian regions, your Sri Lankan, Pakistani, Indian, Asian, Malaysian, Indonesian regions, where they focus on education and on very much focus on education, very much focus on achieving high grades, and there's a different level of discipline, like it or not like it, the way that they're disciplined, and the competitiveness, because in those worlds, we grew up in Sydney where there was from 3-4 million people to now, oh my God, we're overpopulated. We've got 6.5 million people in Sydney. Shit, that's the size of an LGA over in Indonesia. It's something, and when you've got a competitive come from a competitive culture. And this is where they gravitate. Hence the reason why we've got this polarization, apart from obviously the other one being religious temples. So, and this is where the dynamics of pricing, and this is where the dynamics of market prices of a type of class of property differs vastly. And unless you understand it, you don't know, you don't know why on one side of the, apart from like in other areas. So you could be, on one side of the street, you're under one LGA, and on the other side of the street, you're in a different LGA, and your house that was built by the same builder, same design, same of everything, same block of land, and you could be 100, $150,000 apart. A lot of people don't understand why, but these are all factors that have got to be considered. But look, going back, Martin, I think with a lot of this, as our people get educated through the Monday evening property rants, and as they stay ahead of the curve and not behind the eight ball. As I was saying, from what we've looked at, what we've been considering as a team with Dusty, Evan, Chris, myself, we're able to see and try to uh, keep abreast of and stay well informed of future migration pathway policies and who's going to come in, and in what, do they want to channel money. That's on the cards. That is 100% on the cards, because small businesses, your retail, your hospitality is absolutely getting hammered. No matter where you go, where you turn, you see shops for lease, in areas apart from your main shopping centres. But even then, they're struggling to make ends meet in that. So retail and all that. So that you've got to bring in money, and if people are going to be shying away because of the education and because of the global presence that DFA, Walk the World Monday Evening Property Rants has, and people aren't understanding, and they put out headlines over in mainland China on WeChat, stay away from Sydney apartments and all that. I mean, that is the legacy that our construction industry and our you know, what would you call it, broken controls with regards to construction that is given us, or is before us, across the world. So then, those that do want to come, they will focus on anything other than high-rise development.
Absolutely. And I will make one other final point, and that is that both of the conversations I had at the one-to-ones, this was a family that actually had older relatives involved as well. So they were actually looking for a place that was big enough to be able to house not just two kids, but a whole family. And there was more money coming in because the family had money. So the economics was completely different. The requirement was completely different. And the ability to pay higher in particular areas because of the school coverage, etc., was just astronomical. And I had literally had two of those conversations in the same week. So it's a fascinating and really significant element. And again, on this channel, we've been talking about this for so long. It's really important to go granular and understand those dynamics locally, because it really is impacting significant markets.
Yeah, and Martin, on that note, just to add to that, and I would have realised that your Pemulwuys, your Jordan Springs, your Ponds, Schofields. It's very tight areas where when the new home within a certain radius, it was still within the Sydney region. Um, because why? Because the blocks of land are very small. So where are they going to? Where can you house? Where can you have homes apart from your North Shores, upper North Shores, and your beach areas, and your northern beaches areas where you got big homes? They're going to be looking for the bigger homes. They've got to be looking for the bigger homes to house. And it's not only just living with mum and dad. It's like you said, living with grandparents that have sold that have cashed out whether it be overseas, whether it be abroad, and if it's from India, from that region, if from a main city, they would have got good coin for the homes. Don't think that people are living in shanty towns over there. I mean, there are, but the upper middle class and the wealthy, they are very extremely wealthy. We're talking 1.2 billion people.
Hmm.
So and we are very attracted, very attractive to their and likable to their appetite. This is what I'm saying. There's a window, and people have got to start thinking, before now. Nothing's going to be dialed back, and things are only going to get tougher, in my view.
Well, I
My own
think.
personal view, this isn't financial advice,
Hmm.
but just from the from reading the room, or reading the bones we threw out, the prophetic bones.
Well,
It's not looking, the bones aren't telling us a good story moving forward.
no, I think that's exactly right. And that the final point, just to cycle back, because you mentioned the ponds and places like that, both of these families had been watching our shows and they'd done their own homework with regard to flood levels. So they had these two sets of maps, right? They had a map of the catchment areas for the schools, and they had a map at flood levels, and they were trying to figure out where they could buy in the catchment areas above the flood level of the 100-year flood. It was really interesting. And that basically was because they'd been watching what we've been talking about in terms of the due diligence you need to do and the methodical process that you need to go through. And I thought that was really interesting that, the message is getting through to some people, but not necessarily to everyone.
Yeah, look, just on that thread, Martin. Personally, I've got a client, and we're looking for acreage because of the business that they have, and they need to house a lot of heavy machinery and transport rigs around New South Wales, and they need an area to park it all in. And as we look in different areas to accommodate the business, and as much as the agents say that this is never flooded. The owners lived here for 50, 60 years, but it's never flooded. And say, okay, that's great that the house or the premises hasn't flooded, but what about the surrounding areas?
Yeah.
Because you could, just because your house doesn't, that the house doesn't come underwater, uh, doesn't mean that your neighborhood isn't. And so from that point of view, obviously they've had to be very careful. We've come so close to making offers and on properties, but when you do your final due diligence, and you find out that the important part of where the sheds sit, that they have come underwater after squeezing the agent, and after talking to the councils, and talking to them, find out that that particular residents or addresses have come underwater, and the sheds have taken on about say 30, 40 centimeters of water, which is a lot when you got machinery and things that can't that having water will have a major impact on. That's one, and the house, fine, but there are things that you've got to be careful. The other thing is not only the levels of the water, but you've also now got to pay very close attention to what insurance companies are doing. Just because your house doesn't get flooded, just because even your neighborhood may not have got flooded, your block may sit higher than all the other blocks that surround you, just because you're safe, but you're still picking up the tab on the insurance costs of everybody else, and the costs of uh, yeah the havoc that the waters have caused around you. And this is where you've got significant issues now with some, as I mentioned last week. Your parts of Schofield that have been reverted back, and the council has basically said no more, no more, because they can't mitigate the water issues. They can't. They thought they could, and what they've learned from Schofield's closer to the station, and all those development there, they learned that it's a major problems, and they don't want to continue to have those problems moving forward, because the council is going to come under a lot of fire moving forward based on what the issues that they've got now. So now you've got lands that have literally back to hobby farms. And they're back to hobby farms. They're no longer potential development. So from your $6 million values, they've dropped back down to your 2.5. So these are they're the shifts and the changes across the board. But obviously in more established areas, from around your the areas that they would be looking at. One thing is your property not flooding, but another thing is you also got to go further and ask what are the insurance companies talking with regards to the insurance. But that's another cost that's escalating on a yearly basis.
Yeah, absolutely. In some places up 22%, and some places can't get insurance. Let's just quickly look at the numbers before we close out, because the Sydney numbers on 28th, 19,744 properties for sale. The following week, 19,822. And you can see there the trend is still, it's a little higher and tracking up slightly, and still ahead of last year. In Melbourne, 27,627 on the 28th. 27,854, so a slight rise again in the early May. In Brisbane, 3,586 on the 28th and 3,630 on the 5th. So again, the same trend. But interestingly, Edwin, auctions are still relatively weak.
Look, again, it's the Martin North DFA Walk the World Monday Evening Property Rants effect, and that is we're educating the general public out there, and people are starting to be cautious and conscious of the cost, and asking themselves, in my opinion, why should we take the property market, particularly when we're in choppy markets, in markets that most real estate agents don't understand how to navigate through, and a quick option to sell a property and to achieve the highest value isn't going to cut the mustard. That's my feel. That's my take on what's happening, because the numbers, if you look at the last 4 weeks, the numbers look pretty damn lean in comparison to 2024 numbers. Okay, we've had the holidays, we had Easter, we had the election weekend, but next weekend we've only got 446 listed on the domain portal. With regards to registered auctions in the region going up for the 10th. So it's going to be, I think it's both people's sentiment, people wanting the agents to work harder, and they're getting educated, and also the bad publicity that auction campaigns have had over the last year. There's a couple, I didn't want to bring it up to that because it's just been done to death as to Tom's favorite pupil hitting the mainstream news as to the shenanigans that goes on over in Quakers Hill. But that when that sort of stuff hits people, and again, I'll say more to the point is the uncertainty, and you need to spend a lot more time in the marketing campaign to achieve a better result. And quite frankly, because of the shenanigans that go on, and because the way that purchasers are also approaching auctions, if you want to play that silly game of price it low, watch it go, well, you're gonna get burnt, and many people are going to get burnt. And if you want to show the slide of what happened in the eastern suburbs last weekend, Martin, that is an interesting sign of what happens when you play, pay fools to market your property, engage fools to market your property, and you get silly results. Out of 13 or 14 auctions for the weekend on the eastern suburbs, there's only 2 got sold. The rest got withdrawn or postponed.
Yeah, very interesting. And it's certainly consistent with what I'm getting through, again, my one-to-one conversations. People are much, much more cautious about auctions. They understand much more about the way that agents are playing them, and they're not putting up with it. So I think we're going to see more slow pace in the auctions. And, there are some properties that still make it sense to auction, but many not. Just briefly, we'll look at the rental story here. So in Sydney, last week, 10,804, up to 11,045 this week, so a slight rise. In Melbourne, last week, 11,103, 11,327 this week, so a slight rise again. And I guess it's the time of year, but still a lot of people struggling with rental payments and rental increases. And as we come to the end of the show, Edwin, last thoughts from you?
Yeah, look, the think carefully about commercial investments, commercial property investments. I get a lot of feeds from different areas. In my inbox, my social media accounts, and everything, and they're pumping this, commercial, and it's just being done to death. Why? Because they've got to push it hard, and it's tempting, and the incomes may be tempting, but think very carefully moving forward. More so based on the outcomes of the weekend, because small businesses are suffering.
Yeah.
And unless you've got a long-term tenant and a good long-term tenant, it could come unstuck. I've seen both sides over the last over the last 3 weeks. I've been dealing a little bit with as a business broker. I've been assisting some friends and lawyers with some businesses and commercial property as a consultant. And yeah, it's tough. You either have a very good tenant, a strong tenant, and a very well located property, or you could really, come down and burn and burn real quickly. And the interesting thing there, Martin, was that there's a lot of from my conversations, there's a lot of superannuation from I would say commercial fund groups, or the institutional groups are invested heavily in small, even in small commercial investments, as well as individual, high net worth individuals that have, that they've got million, 2 million, 3 million in the super that have been accumulated over the years, and they've put it all on, all on commercial because of the returns, and now the returns aren't there.
No, it's a very important point. And of course, the other issue is a lot of those are very difficult to value. So when you look at the value of shown on the balance sheet of some of these big funds, the commercial sector valuations need to be questioned. Edwin, very interesting conversation today. Thank you so much post-election to catch up with me. I look forward to next week. I'm sure it'll be another fun week. So much to talk about, but I think the message is post-election, people should be very cautious.
Definitely. Looking forward and to catch up with you next week, Martin, and all our followers and viewers.
Take care. Cheers.
Ciao.